clever people can predict trends in free markets, it is impossible to predict what political systems might do. They are inherently unstable and unpredictable. The quote was from Matthew Lynn. It appears on MarketWatch.com, and as I say, it appeared in the TraderPlanet.com website in Robert Colby's column. Now, when you look at all those political fundamentals, of course, you have to consider that maybe in a quotes, because I don't know if you can call them fundamentals, but they affect all the markets. You know what happens if the dollar value changes? Many markets will do the opposite. If you get a strong dollar, you get weak stocks, you get weak metals, weak grains, etc., or vice versa. And you know, we talk about all these outside forces that are affecting markets every day. Hard to react to them, particularly when we have a situation with the political system from one day to the next changing. We read about or hear about things going on in Europe where they reach some kind of an agreement to bail out some countries, and then the next day, well, we find out the austerity programs are not working or whatever it is that's going on. So it's a back and forth bad news type of situation. So we really can't do much about those fundamentals. We can't really gauge what's going to happen next in those kind of situations. So we need to rely on something other than fundamentals, something that will be other than news, something other than events, something where, number one, we've got to get it first, and then we have to interpret how will other traders react to that. And so what I like to use is some kind of indicators that I can get, and the software that I am using, you know, and we'll talk about in this webinar, is from Vantage Point Intermarket Analysis software, which of course emphasizes the intermarket analysis process with a neural network process that selects the 25 markets that have the most influence on a target market, and then builds up a set or produces a set of intermarket data that can be used to arrive at some indicators that provide clues for what lies ahead. Kind of an underlying effect of what is going on in the market, and trying, you know, it's going to have some effect based upon what happens in the surprise, but we don't know the surprise, and so you have to react to that surprise by looking at the indicator clues. I want to mention, you know, that I'm not a Vantage Point salesman, not trying to, you know, convince anybody that you have to have, you know, a particular way to trade or style of trading that I'm going to be talking about. Breakout trading might not be for you. There may be other ways, but this is going to be one kind of a concept that we're going to talk about and share with you that may give you some ideas about setting up your own trading plan, your own trading strategy. We're going to go to the charts now and take a look at those, spend most of our time on the charts, and, you know, kind of take a look at precisely what it is that we are going to be talking about when we talk about breakouts and how to deal with them. And what I'm going to do, I have several markets you might be able to see across the top of the screen there. We're going to run through some of the markets on a big picture basis first, because a lot of times you need to start with the big picture to kind of get a feel for what will happen in an interim basis, because that tends to be kind of a major influence. I'm going to
Darrell,
yes.
Excuse me, Darrell, we're not seeing your chart.
You are not seeing my chart.
No.
Okay, it's on my screen. Okay, what do you have for a background on yours?
I'm just getting a gold square.
Okay, we're going to go to stop sharing. Okay, share an application. Okay. I don't see the Vantage Point on mine either. Okay,
there we go.
You got it now?
Yes.
Okay. Yeah, now we got Vantage Point. Okay, now we can talk about it when we actually have the charts to look at. Well, thanks for letting me know, because that would be very confusing to get into a webinar very far and not have the chart to refer to, because that's the crux of the whole presentation. Okay, now we have the Vantage Point chart here. As I said, we are looking at the top of the Vantage Point window here. You can see that we have a number of markets here. We're going to take a brief look at it with the big picture first, and then we're going to come back and go back to a couple of the markets. We can't cover them all, but come back to a couple of markets and talk about how we would use the breakout type of trading strategy and where we're going to get those those breakouts from. First of all, I'm using soybeans as kind of the key one here to start with, and we'll just put kind of a range situation that we have across here. We know that we had soybeans roughly in the $14 area, and if you want to look at a bottom channel here, we're going to talk about it in the roughly the 1290 area, somewhere like that, maybe a little bit below that 1285, 1290 somewhere as the bottom line in our channel. That's our big picture type of situation. You can see that within that situation, we had some swing trade opportunities in here. We had the little move out here we're going to talk about in a little bit more detail when we get down to the breakout and how to use it. As the yield was deteriorating, and we had a situation where it jumped up, and then all of a sudden we had this long slide here, and we'll talk about that in more detail when we come to the indicators. We're going to then kind of show you the big picture situation. We have the E-mini, the big breakouts. If you're looking at the big breakouts, and that's an important consideration because that is what can stop a move, or if they break through that particular border, that particular boundary, that can be the start of the big move. So in this case, when we look at it, we look at the kind of two levels of the E-mini, and of course everybody knows about the E-mini because everybody follows stocks, and if you have 401k plans or whatever, you kind of got some shocks, and in the month of August when the market started to slide, you got this big situation right here. Let's go back and get a red mark here. That one's not very good. When you had this big slide here in August, we had the breakout right here, and from a traditional technical analysis standpoint, you kind of know where that's going to be. You don't have a precise spot where it's going to be dropping down through, but at least you know that if it does drop into this vicinity here, you have to be thinking about a different type of market context. And so in that context, then you have to have maybe a little different type of strategy that you're going to have to develop to prepare for the breakout type of situation. The new range then after that breakout, when the market did get through there, we have a kind of a new sentiment, the panic type situation got down below this area, and now we kind of have this new range that's kind of in this area right here between roughly 1220 and 1080, give or take, 100 points up above, 100 points down below approximately. These are kind of the big broad numbers, and those are the kind of things that when we have that, we have a framework within which we're going to be able to operate. When we look at the next market that we have on the screen, there are some things here that I know that everybody thinks about silver. It's kind of hard to look at